funded you. Thank you. And after you've been funded, how do you maintain that relationship to get additional funding and additional capital? So that's what we're going to dive in here this evening with. There will be an opportunity in the end for questions. I am going to urge everyone to please put questions in the chat for me, because it's going to be power packed. Okay. So with that being said, I'm going to share my screen at this time. And can you see it? Hello?
No screen.
Yeah, not as yet. We don't have.
Sure.
Now it's coming
How
up.
about now?
Yes, it's about, there it is.
Okay.
It just needs, I think, is it expansion or that? I guess that.
All right. Can you hear me? Hello, hello.
Yes, we can hear you.
Yes, we can hear you. But
I
you're no
think
longer
you-
sharing your screen.
Yeah, you
Hello?
knocked yourself off the screen. You stopped sharing by accident. Oops, I think we lost them all together. Oh, I'm telling you, this technology thing is no picnic.
Super fancy.
Yeah, he will be right back. I think there was just a technological glitch right there. But as Mark mentioned, you know, I think we had someone that just came on, so we will bring him up to speed. It's Angela, you're on. You're awesome.
Finally.
Us, as you can see. Thank you for having the family on. And
Yes, Kamari.
we have some others. I think I saw Joe Janetta. So anyway, basically, until we get our presenter back on, we don't know. We just lost him somehow, but he'll be right back. And just so that we know where we are here, we are talking about, and one of the reasons why we brought him to speak, because a number of you had mentioned the challenges that you were encountering trying to get funding, get grants, the entire enchilada. And so we reached out to Mark and says, we do need not a 5-minute presentation, an entire education on what we need to know in order to stand a very strong, to be in a very strong position in getting funded. There's so much we do not know. And I guess I'll chime in here until when he comes back. There are times when the lenders will ask, your company looks fine, your debt to credit ratio and your cash flow looks good. We calculated that after the loan comes in and we calculate what our payment will be out of your money, you still have maybe a 1.45 or a 1.2 in cash flow over expense, which is good. However, we want to see your family tax return, and we want to know everything about your expenses and your profit and loss. So of course, the question would be, why would the underwriter want to do that? Now, I always share with everyone, the money that the bank is loaning you is your savings account. Just know it, each of our savings account, okay? So when that happens, they want to be absolutely sure that the money is going to be paid back. So if you have a shortfall in your home and it's your business, they believe it's a natural tendency for you to probably dip into that extra from the company, therefore putting the company in jeopardy of them not getting their money later. So
Let's try this again. Can you hear me?
Yes, we're hearing you. You just
Okay.
need to bring the screen
Do me
up.
one favor. Could you pull it up on your screen, please, Winnie?
If you send it to me, did you?
I'll need to send this to you right now, and I humbly apologize for that.
Okay.
mass technical difficulty here.
No problem. Yes, so as we were saying, Mark is here this evening to do a deeper dive in explaining how all that works and how do you start preparing now for being able to have more of a yes. And to me, it's fun, you know, working with the credit process. You just tell me when you send it, Mark, because I'm in the email. It hasn't come in yet, so I'll wait for you. So while Mark is getting this, anyone want to chime in just a little bit? Somebody who is not shy and say what their experience has been in dealing with banks in any measure. Anyone?
Winnie, basically the same process is what they use when we want to buy a home too. The only difference
Okay.
is they're not asking for a profit and loss statement,
Right.
right? Am I
Yes.
correct? Okay, because
Okay. Yes, when it comes to real estate and the borrowing, Mark would probably from a lender's perspective, but it could be that Nairi being a real estate attorney, right? Would you say, Nairi, that you've had any knowledge in that department? I mean, I'm not saying that Nairi is a person that specializes in lending, but
Yeah, I don't actually.
what is that? Repeat, please.
I don't, not for,
Right,
like the
exactly.
businesses getting a loan, no.
Uh-huh, right, exactly.
To answer the question, we would require a profit and loss.
you
Yes.
would, okay.
Yes, we
Yeah.
would for the analysis. And a part of what I'm going to get into this evening is some of those requirements. And those requirements could be used as a broad brush for
Mhm.
multiple different products and not just real estate.
Okay.
And I'll get into that. Winnie, you should have it now if you please.
Yes.
You got it? Thank you.
I'm gonna share it.
Perfect. And I'm just going to dive right in with the interest of time. And thank you so much for being flexible here. So the intros are going to be brief. Next slide, please.
Okay. Let's see.
Which is everyone, which is who I am. I'm a commercial banker and executive sales professional with 15 plus years of banking experience. I'm still the Harbor City Lodge treasurer for Harbor City Lodge 318, a Masonic lodge in Florida. And I also do Access to Capital presentations for M and WBE from Brooklyn Local Enterprise One Brooklyn Health System, which is a major contract that's taking place at this time. Now, who we are at TrueFund Financial Services. For those of us that have been new to the CDFI space and lending space, TrueFund Financial Services is a US Treasury certified nonprofit community development financial institution, or CDFI. We're established headquarters in 2005 in New York, with field offices in Alabama, Louisiana, Texas. We also engage in lending with an office in Houston, Texas, respectively. In New York State, TrueFund serves the 5 boroughs of New York City, Suffolk, Nassau, and Westchester counties, and the regions of Mid-Hudson, Western New York, and Finger Lakes. Now, what is our mission? What do we stand for at TrueFund? Here we stand for to help historically disadvantaged individuals and communities create a thriving and resilient small businesses and entrepreneurial ecosystems in order to close racial and economic disparities and ensure an inclusive and equitable society. Next slide, please. Today, we're going to go through the main objectives of this session is to how to prepare for a loan approval, the overall overview of the lending process, and show you how to maintain that relationship after the approval. So let's dive into understanding the purpose of a loan. In many cases, sometimes you ask for, why would someone approach for a loan? It could either be for checking for reserves. It could be just for borrowing base. Could be for other services. What other services does the bank offer? Or does that financial institution offer? It could be that you're borrowing for payroll. Could be for cash management. an understanding before approaching any lender regarding lending and you understanding what that need is. What is your goal before approaching? And let's stick a pin here for a while. Is it to leverage your equity and achieve high returns in your investment? Is that the main aim of approaching a lender? And while doing so, do you keep in mind what are the specific bank goals that particular institution needs to meet? Does it even come into play? Another part that we need to think about is, how does your earn satisfactory return while minimizing risk? How does that occur? Does their business and does the taxes that you've shown display this? Understanding what it means by bridging the gap between your return and the bank's safety. What that really means is, in a nutshell, is in approaching the bank, demonstrating a way or demonstrating a medium for you to be able to repay that loan within a timely fashion. Does my finances show it? Now, in many cases, it could be a loss. And if it is a loss, can you explain that loss? Is it a way in which I incurred a loss last year because of a pandemic? However, this is what I intend to do the following year. I've lost a few clients, but this is what my business is engaged in to attract others. Give an example. Certain restaurants that have lost so much because of the pandemic. Restaurants that might not be engaging in a Grubhub or Uber Eats. Recognizing that this is occurring at this time during the pandemic, a lot of restaurants pivoted into, hey, let's start delivering. Let's start changing our overall model. Now, these are things that lenders look at. Lenders are wondering, okay, we understand that you incurred a loss, but I'm looking at the other months. I'm looking at the preceding months as your business is still open, as you're still paying bills, as you're still paying insurance. The question has to be asked, what else are you doing to bridge that gap? And in understanding that while approaching a lender, you have your ducks in a row, as they would say, well, hey, I had a negative year. I did this. I pivoted this in this way. I incurred a 10% loss, but I had a 4% gain. It shows that the business is still thriving and you're still proceeding as is. Now, your willingness to accept the loan structure that assures the bank of your ability to repay. What that essentially means is, I approach a lender for $150,000. The lender did an analysis. Within that analysis, the lender came back and said, I can approve for 60 or 65,000. That's your willingness to accept whatever that structure is, as opposed to fighting for 150, because that 150 may be a little bit more than you can support, even though that is the requested amount. The requested amount is always sometimes a large amount, but our job here is to ensure that that matches to a clear understanding of how this loan is going to be repaid. So if you got $60,000 or 65,000 from 150, there was a reason through that analysis why the lender came up with that 60 or 65. Could have been because of the debt service coverage ratio, which we'll touch on today. Could have been because you had outstanding interest or depreciation, which we'll touch on today, which all helps with the overall analysis and final product as to what direction the loan will go in. So let's take a look a little bit here at the lending process. And most common reasons why an individual would approach for lending. And some of these reasons would be for long-term sales growth. You're needing additional capital to support a longer vision. Might it be for additional inventory, or you're changing your overall sales model? So you're seeking additional capital on a long-term basis for a longer term, right, for you to repay. Could be a situation that you're operating on let's just say Coney Island, in which it's a seasonal business. It will only pick up at, let's just say summer. Now we're pretty much at the end. So in a case like that, leading into this season, the business may not perform that well. It's important to understand, the lender understands that your business is cyclical, and you understand that your business is also cyclical when seeking additional capital. Now, the short-term sales growth is, what is the short-term sales growth and how does that match up to your business when you're approaching a lender? It must be asked. And have an understanding as to what that is. Inventory expansion, which is a big one. In many cases, an individual would approach a lender to expand inventory. But here's a few keys that one may ask. Do you own the warehouse? Are you paying rent on the warehouse? Are you actually housing the things for the inventory within your particular residence? Now, this opens a different set of questions, I would say. Give an example. What just transpired with all of the floods? You're approaching a lender. A lender is going to ask, where do you live? Are you housing these things within your residence? And your residence may be in a flood zone. All of that weighs on that product. All of that weighs on the loan. And one has to understand where they are, where their insurance is concerned, with housing this inventory, with approaching a lender. Where does it all tie in? And how does it all tie in? It may be for receivable slowdown, slow billing collections. You may need just to support a short gap. For some strange reason, individuals, they may be slower payers on the other end, that you need that additional capital to push. That's where we come into play. Capital expenditures, whether it's equipment, vehicle, etc. One has to have an understanding as to what is the cost of these things. It's a situation in which I've seen individuals approach lenders for equipment. So I'll give an example. And the question is asked, so what type of equipment are you purchasing? One doesn't know. Do you have an invoice or a markup as to a few options as to how you intend to purchase the equipment? One might not have that information readily available. It's important for you to have that information before approaching the lender. It gives the lender an understanding that you understand it, in addition to them understanding what direction they will be taking the loan. Cash flow timing differences. Could be payables due at the first of the month, billings pay it by the end of the month. One may be seeking the capital to assist them within that time frame. And this one is pretty clear because you would have the receipts to show that within this time frame, I'll be getting paid, but I just need the additional capital to support me for X time frame. And for these cash flow timing differences, it's usually in a shorter term. Unexpected events, accidents, weather, COVID-19 crisis. Some of these are hard to determine ahead of time. And in those situations, one may need to forecast as to, I'm going into a season in which we're experiencing weather, I may need this additional capital. Depending on the type of business you are, that may be easy to explain to any lender for them to bridge that gap. And as you get to the lender and the lender is assessing this information and we go through the reasons as to why you need a loan, you have an understanding as to how you could share that. The lender will be taking a deep look before looking, as they're assessing and doing an analysis on you, as to the 5 C's of credit. They'll be looking at the credit, at your character, your credit history. How have you been paying the bills? Have you been paying the bills? Are there any inconsistencies with payment? And if there is, this might not necessarily be an automatic no, but we would want to understand, what is the story? And in many cases, it's very healthy to ask what that story is, because you need to know what that story is. You need to know how to articulate that story. You need to know how to share to the lender, something occurred at a particular time in my life, but I'm doing something about it because I've recognized it. Once the lender have recognized that you've recognized it, that's half the battle. But if you present this information, or if it is a surprise to the lender, it may count as a part of the analysis against when it comes to looking at the loan. Another thing to take into consideration is the overall capacity, the ability to repay the loan by looking at the finances, by assessing the length of time you're in business, by assessing how seasoned you are, what is your target market, what is your revenue, what is your overall capacity. It takes me back to the example that I stated with one requesting 150,000, but getting 60 or 65. One looks at the ability to repay. And through that analysis, it may be determined that you may not have the ability to repay 150, even though that might be the request. 60 or 65 meets the litmus based on a debt service coverage ratio and based upon a particular analysis. The collateral component. Assurances if the borrower defaults. In some instances, we may ask for collateral components, or we may ask for real estate collateral or cash collateral, depending on the type of program or the type of lending you're requesting. Give an example, in a construction lending, one may utilize the actual contract from the city or state government as the form of collateral for repayment on the loan. So in a case like that, you would have been awarded, give an example, a $4.5 million contract from the SCA or DDC. We would utilize that contract as your collateral and proceed as is to lend 30% of the contract value for mobilization, for inventory, for anything that pertains to that specific contract. We also look at your conditions, the state of the economy, the trends, the crisis. We're looking at what's going on in your specific industry. You may be running a printery at this particular time. You may be engaged in certain particular industries that, based on what's transpiring with the economy, it has an adverse effect on your direct industry. If individuals are more leaning towards reading things digitally, and I'm accessing my newspaper and I'm accessing most things on a digital level, certain particular sunset industries might be affected by the state of the economy at this time. So that's something else that we take into consideration in our overall analysis. So then we look at that loan request, which is the amount, anticipated usage. It's important for us to know where the funds will be going. How are you going to be using the funds? It demonstrates to us that you have an understanding of the ask. I would say I always caution one against when you're asking for a loan or when you're seeking a loan, and a lender asks, how much funds are you seeking? The response should never be, how much ever I get approved for. Because then it means that you're starting from a standpoint of not knowing how you may be using the funds. And it's scary. When one demonstrates, I have intentions of using the funds to hire 2 individuals. I intend to use 10,000 for advertising. I intend to do this for marketing. I intend to do this to expand the business in this direction via Facebook. It shows that you, the business owner, have an intricate understanding of the business, an intricate understanding of the direction you'd like to take it, and an understanding of the ask of the amount of funds that you're requesting at that particular time. It brings about a level of comfortability overall for the deal. Secondly, the purpose. As it similarly touched on with the request, working capital, is it equipment purchasing? In many cases for working capital, one needs to understand what working capital means, because working capital is a broad brush. It could mean many things. And for a lender, when a lender asks, how are you going to be using the funds? And the response, if your first knee-jerk response says working capital, try to expand on what that working capital is, because it's extremely important for you to know that that working capital may mean insurance, it may mean hiring, it could mean repayment on an existing debt. But it's important for you to come to the table knowing where it is going before approaching the table. The other part is the type of facility. The types of facility, it's important for us to understand whether this is going to be a loan, a term loan for a set time frame. Is this going to be structured as a line of credit? And what is best for you? Let's not just put you in that product, but let's have a discussion. Because in certain particular business models, depending on the type of business you have, it could determine a term loan might not be the best thing. A line of credit may be better for you. If you're going through multiple purchase orders in which you need capital within short stints of time to satisfy purchase orders, a line of credit in which you are buying down certain pockets of funds within a time frame may be the best route. If you're seeking mobilization capital, a term loan may be the best route for you, for having that upfront capital for you to be able to mobilize to get things done. And conditions and covenants are always important for us to take into consideration, the collateral component, and of course, you, the guarantor, the business owner, signing and willingness to be a guarantor on the loan. Once that is done, we get into the credit analysis for the personal financials. One of the things we would ask for is we would need to see, being that the last portion that I stated is that you will be a guarantor for the loan request, then we're going to be looking at your personal financials. So this could be one of the first things that we add to the list. What am I going to need when I'm approaching a bank? One of the first things is your personal financials are always, most of the time, going to be asked. 2 to 3 years, preferably. For us at Truthland Financial Services, we ask for 3 years personal financials. Now, your personal financial statements must show joint ownership of any personal assets. It's very important for me to state that. If there are any personal assets that are jointly held, it must reflect that on the PFS. Now, each owner with more than 20% must provide personal tax returns. So if you are a 20% or more owner, you must provide tax returns for the analysis to be considered for the loan. Credit analysis continues. We would be looking at your company overview. So it's always important that when approaching, you have a full capability statement for your company. A capability statement to show the lender that this is who you are. This is how long I've had this company. This is how long I've worked in this field. This is my experience in the field. This is my certification. All of that is extremely important, and it doesn't need to be multiple pages. Usually a one-page capability statement and an overview of your company, it really helps the lender a lot to know who you are. The line of business. What line of business are you in? Is it products? Is it services? Is it a combination of the two? Let's have an understanding as to what that breakdown looks like. What's the ownership and management of the business? Is it a 50-50? Is it broken up into multiple percentages? And what are they? Like I said earlier on a slide, we will ask for the information for individuals if you are 20% or more owners in the business to be considered for the loan. What's your experience? What's your training? What's your education? It's important to share all of this and sell yourself as the business owner when requesting the loan. It helps the lender to have an understanding, A, who you are, how long you've been doing this. Even if you just started a business, give an example. You started a cleaning business. Cleaning business has been opened for 8 months. You're approaching a lender. Lender may say, you have not been in business long enough. Your business has only been in business for 8 months. That's all I could see. If you presented that lender with a capability statement clearly shows that you've been in cleaning for the past 7 years. Now you've decided to get the courage and step out on your own and start your own business. That in and of itself shows that you've been doing this for a while, and you're technically not starting, but you're transitioning because you've been doing this. Your capability statement will tell us that. That's a loan that we would want to have a discussion with. That's a loan we would want to know more about. So in a case like that, you cannot rule yourself out by thinking, hey, I just started this, I don't know much. One of the things we would want to know, how long have you been doing this? Did you literally just start this, or have you been doing this for a while and now that you've transitioned to start doing it on your own? It's extremely important to note that. The percentage ownership, like I mentioned before, if your business has any level of board of directors, it's important for us to know what does that structure look like. Has the board of directors come to an agreement on a party or that signing party signing off on a loan, it's important for us to know if the board of directors have been informed that a party or this particular company is approaching any lender for a loan on a collective basis. What is the track record of the company? Has the company been awarded multiple types of contracts of similar size, similar scale? Has the company done jobs and projects large of like this before? Or is this the first time? And even if it's the first time you've done this, don't be dismayed. We're gonna look at whether you've done similar jobs. We're gonna look at what you're doing in your pipeline. Is this your only job, or do you have other things in your pipeline? If you don't have other things in your pipeline, it lends to the other question. Are you actively bidding on other things? Are you actively involved in other things to grow your business? And the time in business, what's your successes and failures? Because we would want to know about your successes and failures, not just the successes. And who's your customer base? Who are you serving? Who is the target market that you are targeting on a consistent basis? Who are you lending your products and services to? Right? What drives you? And these are the little things we like to understand. And these are the things that helps us with our credit analysis. Who's your competition? How are you ranked with your competition, and how are you ranked with your peers? It's not just important for us as the lender to understand that, but it's also important for you, the business owner, to know where you are ranked with your competitors. You're approaching a lender and not knowing where you are with your competitors, it puts you somewhat at a disadvantage, because then you don't know specifically how much to ask for. You don't know a peer analysis as to where your specific company ranks with others. If I'm in the cleaning business, I would like to know that if I'm going to be placed on Angie's list, I'm with 5 stars with the first 3 picks, as opposed to the 10th. You want to know where you're ranked with your peers. It's extremely important to know that. And what's the industry condition and trends? How are these trends driving your business? Are they shifting your business in a negative way? Is it time for you to re-envision your business? Is it time for you to adopt technology? Is it time for you to bring that on and incorporate it somehow? These are some of the things that we consider, and we look for your business to see if your business has adopted to these things in our credit analysis. And we'll go on to credit analysis continued. We also would ask for the financial statements, 3 years business tax returns or financial statements reviews or audited for the business, and internal financial statements, profit or loss, the balance sheet, income statements, cash flow statement, receivable aging, payables aging, and contract status report and work in progress. The question is, what would you need? Let's take a pin at that slide for a minute. So the question really is, what do you need to get funded? What documents do you need? If one, before they approaches a lender, have a keen understanding of this, and you bill a packet, 3 years of your personal, 3 years of your business, please ensure that you have interim financial statements. Now that we're in the month of September, please ensure that you have filed your taxes for 2020. If you have not filed your taxes for 2020 and you're approaching a lender, have a clear understanding as to why. Have an extension letter in hand to provide and furnish to the lender, because they will ask for your 2020 taxes, being that we're in this month. Something very important to note. Another thing to note is the interim financial statements, profit and loss report. It's extremely important for the lender to see. Let's just say you had a loss in 2020, which you have shared. The lender would want to see how you're coming out of that loss. How are you trending in 2021 now? Has things picked up for you? Are you continuing along the same trajectory as you did in 2020? Is it worse from how things were in 2020? These are some of the things for us to consider. Now, in the cash flow statement, that's another important document that we would need for the analysis. Because in the cash flow statement, you're telling us for X time frame, you're requesting a particular funding amount that you intend to repay us back within X time frame, and you're showing us how you intend to spend the funds. That demonstrates understanding. If one can demonstrate the request of $150,000, how they intend to use it with an understanding of their business, which expenses are going to be coming out of that business on or around what time they're going to be coming out of that business, then that loan will be approved, all factors equal, with this information here. Because it would have been fully laid out. The receivable agings, you're just sharing that with us. The payables agings, you're keeping a record of that. The contract status report or work in progress report, these are things that business owners should start getting into the habit of keeping track of. If you're having multiple works in progress, an individual would want to know that you're working on multiple things and you have worked on multiple things. That instills confidence. Same thing with your balance sheet, same thing with the income statement. Now I'm going to show you a brief example of some of the profit and loss statement and balance sheet that we request in doing our analysis. We would look at this, and in looking at, I'll start with the profit and loss. So you present this to a lender, and you're seeking levels of capital, you're seeking access to capital, you're seeking 150,000. A lender looks at this, and a few things that I would look at initially, the first place my eyes would go is to find out, is there any depreciation on this? I would look to see, is there any interest? I would also look to see, what are you paying for wages? What does the income portion look like? But the heavily weighted portion for us is in that expense section. That section that starts with your accountant and legal, advertising, banking, loan interest. So let's stick a pin there, because that's the first place my eyes go. So you're approaching a lender, this particular profit and loss has an interest expense. It means that there's a loan somewhere out there, somewhere you're paying an interest on. We would want to know how that plays into us lending to you. And we would want you to know, hey, in approaching us, don't be dismayed. We can still proceed with the loan, but we would want an understanding. How much do you owe that lender? Because that particular interest expense plays a part on what we're going to do with our calculations. And it plays a part with your EBITDA. I'm also going to look at your depreciation. How is that taking away overall? How are we adding this back? How is this benefiting you for the amount that you're asking for? What are the service charges? How can these things that I'm looking at in your expenses be reduced in any way to accommodate a loan? And that conversation could come about usually if it's a decline. Usually that conversation comes about when we really start digging deeper and extrapolating things out of this, when it may be a decline today, and the question is asked, how could I have met it? Or how could things have been different? And then one would ask different questions. How could you have reduced certain particular expenses? How could you reduce restaurant and supplies? How could you have reduced telephone and fax? You're looking at certain high ticket items, and you're matching those high ticket items to the type of industry and business. And if it's a little bit more than you will see your peers come in, it lends to us asking questions. One of the biggest things that I see here is the restaurant and supplies. And one would really ask the question, how do you determine what's in restaurant and how much is for supplies? Because it's a high ticket amount. All of that takes away. So those are some of the places. So those are some of the key places, in addition to, last but not least, what is that net income? What does that bottom line looks like? What is that take home amount? Many times I think the focus usually is on what is that top line? What is my income? How much is the company bringing in? What does the revenue look like? But that's nice, but we would like to see at the end, when the expenses have been deducted, when you've already paid everyone with payroll, wages, vehicle, gas, what is that take home amount? What is that net income amount? And in this case, it's clearly positive. Then we will look at our balance sheet. That's really where our eyes will look at in really doing a deep dive on this profit and loss statement. For the balance sheet, I'll be looking at, what are your current assets? What is the amount for your long-term assets? Your net worth will come into play to a minimal degree, but the overall net worth, where your liabilities, your total liabilities, we will take that into play where your liabilities, just to see exactly how does it weigh up to your ask? How does your accounts payable, how does that look with how much you're actually asking us at this time? Do you have any bank loans? What does the notes payable look like, and how does it reflect with the amount you're asking for the industry that you're currently in? And these are pointed things that it tells a story for us, for any lender to look at this profit and loss and balance sheet. But it's also important for you, the business owner, to know what we're looking at. Overall, this is where my eyes will go for the profit and loss and balance sheet. This looks quasi-healthy, and overall, I would clearly say that this is an example. We would be able to proceed with the profit and loss and balance sheet like this and be successful. We would go further with our analysis. Next slide, please. To determine, after looking at the profit and loss and balance sheet, after looking at your 3 years, your 3 years personal, after looking at your 3 years financials for the business, we're going to look at what is the overall financial analysis, profitability, net income and retained earnings of the business. Is the business profitable at all? Those are the two highlighted spots. Is it liquid for the company? What is your leverage? Is there any in the company? And the overall solvency of your company, is it intact? Is it in place? Can you explain your ask in your cash flow statement? Can it be clear to a lender that if you determine that you have X expenses within a given month, can you actually paint a picture on a cash flow to determine, I just need funds for 6 months. I just need funds for 8 months, and be clear with sharing us that story. Can you be clear with sharing us what the historical analysis is with how you got to the funds? Because we're going to be looking at the last 3 years, personal and business. Can you tell us a story through those financials in 18, 19, and 20, and then 2021 when we're looking at it? Can it be clear and concise? And most importantly, can you share projections? Can you demonstrate to us your insight and vision and tell us, if we lend you $150,000 and I share with the lender how I intend to use it, you can clearly show us the projections within another 2 years, 3 years. I project X profit because you lend me $150,000. Or as a result of this particular loan, I'm able to project X amount of revenue over the next year. It's important for you to be able to have that vision as a business owner, because that vision helps you to determine how you're using the funds that you're borrowing. It helps you to know where to plant your feet with how much to ask and how to strategically utilize those funds for your benefit. And what's most likely to happen next? What's the downside? Is it a lower growth rate? Is it a higher interest rate, etc.? What matters the most for us to be able to move this needle in the credit analysis, but yet still be profitable for your business? Yet still, we move the needle, but your business is still successful. How can we get your business there? And next slide, please. How do you build that relationship? Now, how to build that specific relationship after you've presented your request? You've presented your last 3 years personal taxes, your last 3 years business taxes. You've presented your capability statement. You have a clear vision of your projections. You have an understanding of your use of funds. You know what the asking amount is. You know how you're going to use it, and you know what time frame to use the funds. Then help the banker get the information he needs to evaluate and approve the request. That's a long, in-depth list of pretty much everything that will be asked for pretty much all the time on almost every product. And it's important for you, the business owner, to help the banker to get that information to them within a timely fashion. We all know that the infamous question is, how soon can I get funded? How soon can we close on the loan? And that's always contingent on how soon can we get a full packet? How soon can I get the profit and loss? If you haven't filed for 2020, how soon can you get me the extension? And what is your overall, what is the aim for the annual audited financial statement prepared by an experienced construction accountant? That is important to know. Be willing to provide complete financials and keep on giving the bank periodic update information, at least quarterly. Sometimes the bank may not readily ask for it, but follow this. If you periodically inform your bank of what your financial situation is after getting the loan, the bank doesn't need to ask for it, but when it's time for you to ask for extended funding, the bank has all the documents they need. It minimizes the length of time for you to be considered for additional funding. So that's something to consider. Keep on giving the bank periodic update information, at least quarterly. That's balance sheet, income statement, contract status report, receivable aging, and payable aging. It's also important to note that if there are any changes, any immediate changes that occur on the contract, reach out to your lender right away. There may be cases that you might have gotten a loan. There may be inconsistent payments on that loan, which may inhibit you from paying the lender. Lenders understand that these things occur. But the key thing is to keep that communication open, is to keep that communication going. And I know this very well in doing construction lending, that it's so fluid and so many moving parts that when things occur, it's truly advantageous for you to reach out to the lender before the lender reaches out to you. Something to know. Be prepared for inquiries about what you made for your supplies, for your customers, for your bonding company, the lenders, for your competitors, an accountant's lawyer. Be prepared for us to inquire more and more and more about this information. Because the more information we inquire about is the broader picture we have, and we understand your business even more. The main aim for us is not just to lend, but is to ensure that your business is successful, and we're walking side by side with your business with that level of success. Check your personal credit report and your company's Dun & Bradstreet report to make sure the information is accurate. It's extremely important that you should be checking this information on a regular basis to ensure any inconsistencies before it gets to a lender. Do you know what is the statistics of individuals approaching for a mortgage or they're approaching for a loan? And the credit institution does an analysis and they present something to the client, and the client is totally blown away that this was on their credit report. They had no clue. They had no knowledge of it. That's why it's extremely important to check this on a regular basis. So I would say set yourself up for alerts. In the event of any movements that take place on your credit report, you're readily alerted right away in order for us to proceed. Next slide, please. Now, another key thing that we look at is the banking finance calculations. And one asks, and this is pretty standard when you're dealing with all of the loans across the board, is what is your DSCR, which you hear on a regular basis. What is the DSCR? It's your debt service coverage ratio. That is what it means. And to determine your cash flow, amortization is based on I would say 5 years. You're gonna add back the depreciation, the amortization and interest expense listed on the company's tax return. Now I wanna stick a pin here for a while. In a few slides, and a few of the previous slides, when I was looking at, and if you could go back there to the profit and loss and balance sheet, slide 13, please, Winnie. You remember the first thing that I looked at when looking at this slide was, where does my eyes go to first? Because of course I'm gonna look at everything. I'm gonna glance at everything. But at first, my eyes are gonna be drawn to a few key things first, which is, what is the interest expense, as I stated? bang, it looks like it's $150,000. It looks like there's a loan and it's carried over January, February. That's a key thing for me to know. Is there any depreciation? These are some of the key things that I extrapolated from this that any lender will look at as a part of their analyzing for the debt service coverage ratio. Let's go back to slide 16, please. So we're going to take that information, just looking at it, and it doesn't need to be a profit and loss and balance sheet. It could be the actual tax returns, but you're looking at the financials and you're extrapolating this information, and you're adding back the depreciation, the amortization and interest expense listed on the company's tax return, and the debt service coverage ratio. Well, that's how you get to your debt service coverage ratio. It's the net income plus the depreciation plus your interest expense divided by your annual debt payment, whatever that debt payment is. It's always good to know that in approaching, because individuals think that it may be hidden as to how do you analyze this loan? What are you looking at? And it must be stated that there are other things that we look on beyond your actual credit, as I stated. We're going to look at how you're paying your bills. We're going to look at the consistency. We're going to look at if there's any collections, but it's not going to stop there. This debt service coverage ratio helps us with an understanding as to whether you can support the loan, whether your business has the ability financially, based on the documents that you've presented us with, to be able to support a loan in any capacity. Now, each lending institution has their own internal specific criteria as to what that debt service coverage ratio is. So to get to that DSCR, it differs across the board. We at TrueFund, we have our own internal, and it's advantageous with you. I mean, anyone can basically determine what their debt service coverage ratio is even before applying. But once you have applied, we will work that out with you. We will tell you what it is. If it doesn't meet the litmus test, we will tell you the why, because we're looking at certain specific numbers in our analysis. Next slide, please. We're going to go through another example here by looking at Joe's Construction. And I want to bear in mind, if I'm going a little bit too fast, please let me know, and please put your questions in the chat box. But each of these slides are building on the next. And I'll recap before I get into this. Initially, I stated this is the documents we're going to need when you approach a lender. Then we got into the specifics as to what those documents are. Then we built on the specifics, 3 years personal, 3 years business, in addition to year to date. Then we built on that. What else would you need outside of that? We will need a capability statement. The lender needs to know who you are. They need to know whether you're experienced. We need to know whether you've been doing this for a while. We need to know what your target market is. We need to have an understanding of your competitors. We need to know if you've done somewhat of a minimal peer analysis to know who you're up against as you're asking for funding. What else do you need? You need to have an understanding of the request. How much am I asking for? What is the use of funds? The use of funds is extremely important to note, that I am needing X amount and this X amount is going to be used for X, Y, and Z. It's very important to note that. And as we've transitioned things, what does a lender look at? A few key things they look at: length of time you've been in business, the type of industry you're in, how long you've been in that industry. Are you profitable in that industry? Can you present projections after we've lent you funds? If we have intentions of lending you X amount, can you show projections how you intend to use that funds and how it intends to benefit your company? These are some of the things we look at. And then it fast forward things to the debt service coverage ratio. We look at your DSCR and how you get to the DSCR by taking your net income, adding the net income to depreciation, adding it to interest expense, dividing it by your annual debt payment to equal the DSCR. Now it fast forward things to example with Joe's Construction, which is another example we're going to get into here. And slide 17, please. Thank you. Financial reporting. So in this financial report, Joe's Construction has approached the lender. Annual sales, as you can see here, depreciated expense, 9K, interest expense, it's all listed here. You see what the debt is. And I want, as a little kicker, before I stated, when I'm looking at this, my eyes go to certain specific places first. So as we're building step by step, previous slides, I stated, hey, when I looked at the balance sheet and the profit and loss and balance sheet, my eyes went to certain specific places, and those places I extrapolated and I used it for my DSCR, which is the debt service coverage ratio. This is no different. I'm looking at this, I'm seeing, hey, depreciation expense, it's 9K. I'm seeing interest expense, 7,000. I am seeing a net income, 15,000. That's where my mind, that's where my eyes is pretty much going to go. Of course, I'm going to look at the other things, but those are the key things that I'm going to extrapolate. Next slide, please. And we may be flipping back and forth here a little bit, Winnie, but when you look at this, I took the 15,000, and I will say what it is. The 15,000 is your net income. So I used the net income, 15,000. I added that to 9,000, which is your depreciation expense. And I added that to 7,000, which is your interest expense. I divided that by 22,645, which is the debt payment. That gives us a 1.37. That would be an approved loan, all factors equal. So before approaching a lender, this is an exercise that you, the business owner, can engage in. You can take the taxes, just like I did with Joe's construction with that example. And if you could go back there 1 minute, please, Winnie, to 17. I will take the same example for Joe's construction. We know what our annual sales in our businesses are. We know what it is. We know what our depreciation expense is. We know what our interest expense is, and we know what our net income is. We should all know what the accounts receivables are for our business. We take that formula, and we utilize it accordingly, because the formula will not change. You approaching a lender, and a lender is looking at other things in addition to your debt service coverage ratio. And you looking at your credit, you having the alerts on your credit, you having the notifications on your credit. Right there, that eliminates two surprises. The first surprise it eliminates is, well, I know what's on my credit, so there's no surprises. B, I know what my debt service coverage ratio is while I'm approaching the lender. So in that respect, there's no surprises. I'm matching my math with whatever that lender's criteria is as it pertains to the debt service coverage ratio. So as I'm doing this, I could say, hey, Mark, I'm approaching you for a loan. I've already done my debt service coverage ratio. It's 1.37 times. And my credit, I've just checked it, is a 724. There's no inconsistencies. So you can answer any and all questions as it pertains to A, credit, and B, as it pertains to your debt service coverage ratio. Anything else, of course, you can answer. You can answer the length of time you've been in business, whether this is your first time, how you can pivot, your competitors. You can answer the others. But some of the key things when it comes to the financial component, you can answer these before approaching the lender, because this is an exercise that we all could go through in just fostering a deeper understanding, which brings us even closer to getting accepted and getting approved for a loan. Next slide, please. So after Joe has done that, and Joe has presented us with this, and we recognize Joe has a debt service coverage ratio of 1.37 times. He can manage a loan. He could definitely support a loan based on the documents he has provided us with. Now we, the lender, need to make a decision. Now that you've provided us with your taxes, now that you've provided us with your capability statement, we've had an opportunity to analyze those. We've had an interview with you. You've had an opportunity to address some of the questions that we may have. Now it's time for us to look deeper in making a decision with the loan. Of course, in making that decision, after analyzing the financials and everything, we are going to take into consideration what the purpose of the loan is. Why do you need the funds? Is it for leasehold improvements? Is it for expansion, and is it for inventory? Is it for payroll? Is it for hiring more individuals? Whatever it is, we need to have that understanding. And that would have clearly been articulated to us before that point, but it's something that we do take into consideration. Is there any legal aspects to this that needs to be taken into consideration? Were there any bankruptcies that were filed? If there were bankruptcies that were filed, what is the status? Were they discharged? Were they dismissed? What is the status of them? Are you currently going through a lawsuit? Are you suing someone? If that's the case, what is the status? Ethical. We look at what the overall ethics is for us to proceed in lending to that industry. We look for our policy compliant. Is it within our policy to lend within this industry? Can we lend within this service type? What is the repayment analysis? What are the terms of the loan? And the cash flow component is the debt service coverage. Do you debt service within the company's policy, which demonstrates to the lender that you have the ability to repay whatever that loan amount is? And is there any collateral involved that we need to take into consideration? In some cases, if there's real estate collateral and one is approaching for a specific type of loan, one may take the real estate collateral in consideration and proceed as is, even though the financials might not meet the litmus test, because you're offsetting or leveraging the loan against that real estate collateral. That helps in moving the needle. The guarantor, how many guarantors are there going to be? Is it just going to be you? What's your position? Meaning, what was your personal financial position in guaranteeing the loan? And in guaranteeing the loan means, in layman's terms, is we will proceed with the loan against your business. And in the form of any default, we will look at your business first. And then we will look at you as a guarantor of the particular product. What's the structure? Is it going to be a line of credit? Is that suitable for you? Do you have multiple pockets of inconsistencies of payments in which a line of credit would be better suited? Or would it just be a term loan in which, or equipment financing, in which all you need is just mobilization funding for you to start a project? You don't need additional funding, or you just need funding to get you to the first or second requisition, and then you're okay. Is it a pay in full? Can you pay in full when we're looking at our structure and making our decision? Can you pay on time? Do you have the ability, based on you engaging in this particular project, to pay us on time? And like I said before, things happen. We do understand that things happen. Floods, COVID-19, pandemic, what might have you. But the key thing is, and any lender will tell you this, communication is key. Keep communication open with your lender. Whoever it is, whatever the situation is, contact them. You never know what someone can do for you unless you ask. And I oftentimes say that. Individuals would say, Mark, well, you know, things are rough. I didn't pay you guys. You know what's going on in the economy. And of course, we do know what's going on in the economy. No one's living under a rock, but at the end of the day, we would like you, the business owner, to come to the table and have that discussion with us. And it says a lot because it comes right back and ties right in to the first C's in credit, which is character. That demonstrates a lot of character when one keeps the communication going with their lender after the fact. And do you have abilities to pay as agreed upon in the terms and conditions of the contract? And how do you continue building that? After this decision has been made, or while we're going through the exercise of this decision, and we have made this decision to approve the loan, you've met your debt service, you've given us everything we needed within a timely fashion, you've given us a packet, we have an understanding who you are, you've furnished us with a capability statement, we know who your target market is, we understand who your competitors are. Then it takes us to the next stage of, how do I build that relationship even further? How do I help with the loan request? because all of this helps after the fact. You're helping the banker to fill the loan request. You translate the reason for your borrowing into a specific amount and for specific purposes. If there's any other takeaway, this particular slide is key. Be able to show that you can repay the loan in a specific time frame. Be willing to guarantee. Make sure your personal and financial statements and personal tax returns are up to date and available. Nothing holds back a loan more when a lender is requesting a document and the client is, well, I'm waiting on my accountant to get this to me. And I've been calling my accountant and my accountant is busy. You know, it's tax time. And it's good. It's good that you're sharing that information. But the here and now, we need that document to analyze your deal. And I need it to be understood that if those documents are not given to your lender within a timely fashion, your loan cannot be processed in its entirety within a timely fashion. That needs to be clearly understood, that when any lender is requesting certain particular documents for the analyzing of a loan, and I would say an individual may procrastinate in furnishing the lender with such, it could put an entire damper or a hole in the entire thing. And it will extend the length of time for us to get to that decision because we would need that to look at it. And be willing to collateralize if needs be. If we get to a point in which we would need to utilize collateral for the furtherance of the loan, be willing to have an understanding as to what that looks like. One thing I must stress, every lender, and I said it before and I'll say it again, every lender may have different criteria as to how they're lending. When I say be willing to collateralize, I mean be willing to ask questions as to how collateralizing this loan looks like. And never ever approach it with a preconceived notion because you've had a discussion with another lender. It's always good to approach it with an open mind as to how is this lender going to assist me in collateralizing this and how does it look like? Allow that lender to be a Picasso and paint a picture for you as to how they're going to be doing that. Next slide, please. And now that we've done that and a decision has been made, and you have assisted the banker in making that decision because you have had an understanding as to your loan request, you've articulated it clearly, you have an understanding as to how you're going to repay the loan, you have an understanding of the framework, the terms, the length of time it takes for you to repay this. You have an understanding as to you being the guarantor and how that fits into the grand scheme of things of this particular loan. Then the question arises is, how do I maintain that relationship now that I've been funded? Now that I've went through the exercise, now that I've presented the lender with everything that I've needed, now that I have an understanding that I'm walking away from with the debt service coverage ratio, what it means, how my business ranks up to this, how my business ranks up to be able to borrow, what happens next? How do I keep that relationship with the banker? How do I keep that relationship with my lending institution? You remember I said in one of my slides is, as you proceed, keep giving your lending institution documents quarterly. That's a part of the communication. As time progresses, drop them a line as to how things are going with you. Be willing to let your banker visit your premises, examine your records, tour some of your jobs, call it a site inspection. Be willing to communicate regularly by phone, by email, or by in person, what's going on with your business. Some of the most successful individuals that have deep-rooted relationships with bankers, deep-rooted relationships with institutions, are individuals that will drop a line in an institution and they're not seeking funding. They're just calling to say hi. Hey, thank you guys for funding me. I may have a few things in the pipeline, but right now I don't need anything. But I'm just dropping you guys a line just to say my business is doing well and we're still chugging along. Make your payments on time. That's important. It all ties into part of the character. Attend networking events with your lender. It shows a way that you can basically say, I have a lender that supported me. Here I am. You could do the same. It's a good way for you to showcase what you do, who you are. And it's a good way for you to show who your lender is and how they've supported you. It's a great synergy and it's a win-win situation for all parties. Let's take some review tips. Some review tips. Next slide, please. Build your professional team. How do you build that base when you're building it with your banker, with your institution? Ensure that you have a solid team for growth. Build a professional team. Look for a lawyer experienced in construction or real estate law, if that's your field or whatever your field is, to examine these documents, to understand where you're going as you're bidding on larger projects, as you're engaging more lenders. We give documents that you need to read. You need to have an understanding of the loan structure. That's why we're extremely thorough in asking these questions. How are you using the funds? Where's the funds going to be used for? Do you know how it's going to be used? Do you know how much you're going to be needing? It all ties into getting that deeper understanding for success. Try to enlist a couple of outside directors, lawyer, accountant, engineer, architect. You need to get diverse individuals who can bring their diverse experience to the table, to provide you with outside advice and counsel on a basis to help you succeed even further. This is what I mean by building a solid professional team. Part of building that solid professional team starts with an understanding of your finances, having an understanding as to where you are with your company, having an understanding as to where your company will be going. So when you do engage a lender, you can articulate that clearly, and your lender can become part of that support team for you. Next slide, please. And how do you get them to consider your next round and your next round? So we've considered you the first time. We see your repayments. You've been engaging with us. You've been communicating with us. You've been touching base with us quarterly by telling us this is what's going on. This is how my business is bolstering. This is how I'm getting better with things. Give the company financials. You have to look at the company's financials to see if they're profitable within 2 years. This is for further funding. And there could be exceptions. It could be losses caused by depreciation or interest expense can be reviewed, but we still look at this for consideration. Exceptions also too could be loss caused by rent expense, in which a borrower is moving to a new location. Individuals may be seeking funding for an additional location. You already have that relationship with your bank, but you need additional funding, which happens all the time. You already are in a loan and something comes up and you're wondering, what do I do? The good news is by fostering that relationship and with us being a part of that team, it's easy for us to make these considerations even after the fact or even more. The owner must earn an income and show it on their personal taxes. Retained earnings reveal the profitability of a business. These are other things we'll consider. But like I said here, and these are the two noted things that must be said, there are exceptions to these rules, as noted here, that we can consider. As a mitigant, it's always wise that for you to continuously engage your lender after the fact. And knowing that we have already lent to you, it builds a level of familiarity and comfortability in future lending. Next slide, please. And I would say in conclusion, how do we continue to get your bank to consider? After we've said yes once, it's not going to stop there because your business is going to grow. The main aim of us engaging in a loan is for your business to become better, for revenues to increase. So it only means that you will be bidding and you will be increasing on other things where that is concerned. Our job is to continuously help with the cash flow. Can the borrower and the guarantor's income and profit afford me more debt? That's the question we would ask for more money. Collateral. What can the borrower and or guarantor pledge to back up the loan in case of a default? If you've had great payments, everything is going well, depending on the industry, the collateral component might not even come into play. The personal net worth. What is the personal net worth of the guarantor? Does the guarantor have the saving investments accounts to inject in the company if the company stops operation at any given time? Now, these are a few things that I outlined this evening that I wanted us to consider in approaching any lender. Having the understanding, not just approaching the lender and having the lender to say yes with that comfortability, but having the lender to continuously say yes and walk with you through this journey. these are some of the key things I wanted to highlight this evening. I hope and trust that we did take away and extrapolate a lot from this. And I have given some room for questions. And here's my information. If there are any questions that I didn't answer this evening, or any gray areas of anything that I might have touched on this evening, please reach out to me for further clarity, and I'll be happy to explain.
All righty, all righty, all righty. Let me tell you, did you get your bottle of water, sir, or your wasn't sure if you came up for air, but you did a fantastic job presenting. And so there are two things. I made sure I copied a number of questions that I would like to engage in conversation, but I'm hoping that all attendees, the chat is open. You will be able to open your mic and ask questions. But if you choose not to speak, just write the questions in the chat. Both Mark and myself will review it and respond to it, okay? So what I wanna do at this point is hoping that everyone could take their camera and do a screenshot of how to apply with Mark, because I need to close this PowerPoint so that we bring back everybody in one big family, all righty? So I'm going once, going twice. You have taken down this information, screenshot it so I can close the PowerPoint. Okay, close. All righty, so now we are going to bring everyone back. We are welcoming Nisha, Sonia, Patrice. I think those are the new additions that were not here when we first had introductions. Welcome, welcome, welcome. All righty, and Sonia, yes, and there's Sonia too. So Mark, what a wonderful, let me tell you, this is being recorded, and this is going to be one that's going to be a profitable recording. Because Mark, what I've just discovered in your 1 hour presentation is the main fact that individuals, small business owners, if they do not get anything from your presentation, they should walk away understanding that when they start the business, they're at the implementation stage, sir. And you can correct me as I go along, because this is so exciting. I don't think I'm going to sleep tonight. So just hold me down, okay? This is the space I live in. So implementation, if it's a product, they're staying with the product. They're making the product. They're baking. They're doing whatever. They're cooking. They're inside the kitchen. That's implementation. You cannot stay there unless you have a partner, Mark. Mark, and you go along with me here or tell me I'm wrong. One of the greatest challenges with small businesses is that those who like to be in the kitchen, those who like to be working with their hands, do not have a partner. And I believe that's fatal, number one, in stifling them from growth, because everything you just shared here tonight, the person who is managing that should not be doing anything else in the production part of their business. I've learned that early from since 2000 when I'm having my business. My sister was the one that enjoyed being with the client, and she was doing the beauty part of it. I had hairdressers, the massage. Winnie was always found in the office working on everything you just lined up here, and it's a full-time focused position, right? And so therefore, this is the message I would like our small business attendees to understand. The emotion of holding on to because you like what you do, it's fabulous, but for heaven's sake, get a partner who will focus strictly on what Mark is saying. If you're going to get your business into the millions of dollars and grow, if you're going to get the loans. And Mark, I am done temporarily speaking to you to respond and get others to ask their questions. Yes, sir.
Now, two things I would say. Now, the getting the partner aspect, I'm with that idea. But I have to say with a caveat, not everyone has that luxury.
That's right.
Not everyone has the ability. So in theory, I would say I would like to have a partner because I bake cake.
Mhm.
But you know what? A part of me feels like no one can bake cake better than me.
Mm.
So in order for me to share or relinquish that, I need to have an understanding clearly of whoever else I bring aboard. And sometimes it starts there. It's not about an individual wanting to hold on to your baby and what you've created, but sometimes it's finding individuals who would be willing to work with that same vigor, that same drive, and give it your all because you've created it. Most creators hold on to what they create. And the question I always ask myself is, could you get someone else that you can hire, no matter how much you're paying them, to have that same passion, to have that same drive, to lose sleep the way you use sleep because it's your business. So sometimes it's difficult in finding that partner, but I will urge everyone to strive to find that partner. And if it's within your wheelhouse, partner. But if not, you're not going to close your business. You got to find a different way. So that's the first thing I would do where that is concerned is if you cannot find a partner, hone down and getting a deeper understanding of your business.
Mhm.
Because what I found is individuals that don't have partners, but they've been in business for 10 years. They've been in business 15 years. And I look at the revenues and I ask myself the question, what is happening? Because I don't see it increasing. So it means that you're doing the same thing over and over again and expecting a different result. So that's what you need to hone down first, that understanding, which changes into habits. And once these habits are there, you're like, oh, wow, I can hire 2 other individuals. I can finally go on a vacation. That's when you can breathe. So that would be my response.
I just want to say one thing, and then Helen, I believe, has a question, and everybody else raise your hand, if you will be next, right? So Mark, here is something that I did when I first started a business, and what you said was so on point. I had a great banker that became my boss. When I say became my boss, he was not invested in my business other than my starting my checking account, opening up my new business. He said, okay, now I'm going to set you a revenue goal. 7,500 every month is your revenue goal. So you go out and you produce. I needed to hear that because let me tell you, I broke it down by the day. He showed me what I need to do by the day, whatever means get on the phone, call people, get the numbers done by the day. I needed that because I didn't have a boss. So I allowed the bank to manage me in that regards, right? So one of the things that I did, and my banker was very instrumental in doing this, and that's the answer what you said, Mark. Some people just can't let go of the passion. So he said, get yourself a bookkeeper. It's much easier to get a bookkeeper than to get someone to do your cooking or whatever you do well. And the banker was willing to train the bookkeeper on everything you just mentioned here tonight, to keep their eyes on all of this, and then they know how to report with the CPA. And he said, if you get me your CPA, get me your legal, get me your marketing person, bring us to the table. This is what my banker said, I'll never forget it. I will tell them and try to explain to the entire team where you are going with your vision. So we are all on board and we know what to do. I'm here to say Mark did a fabulous job. I don't mind sending out this recording to everyone because it was a mouthful and it works. Everything he says, it works. All right. And so I'm shutting up. It's going to be Helen next, then Natasha. Anyone else can raise their hand or the emoji. Welcome, Stephen. Welcome, welcome. Okay. Helen, please.
Mark, I want to say thanks for a phenomenal presentation. I mean, it was chock full of information. You broke everything down simply, I mean, in layman's terms. So it was awesome. I have 2 quick questions. I know you mentioned that different banks have different thresholds for the debt service coverage ratio. In terms of True Fund, I know you gave an example of Joe's, whatever it was, and it was, you said his loan would be approved at 1.37 times. What is are you able to disclose what is True Fund's threshold?
Well, Helen, that's a great question, and thank you for putting me on the spot. I'm not at liberty to fully disclose it, but I will say it's on or around what the example was for approval. Hence, was using that as an example.
Fair enough, fair enough.
Thank you.
Thanks for that. And then the second part of my question was, do you request business bank statements? Because I don't know if I missed it, but I
Yeah.
didn't recall it being mentioned in your presentation.
Yeah, the 3 and 3. So
Oh,
the
okay.
3 years personal, 3 years business.
Bank
Because-
statements.
Yeah, banks.
Okay.
No, not bank statements.
That's what I was asking about. I know you said
tax
tax return.
tax returns, not bank statements. No.
So bank statements don't come into play at all.
No.
Okay, thank you. Thank you so much.
You're welcome.
All righty.
You can see I was in the zone there.
Natasha, you are next.
Hi, Mark. You always make me have a headache, but in a good way.
Thank
You
you.
always have a mouthful of information, and I'm always trying to keep up with you because you just keep spilling out gold nuggets constantly. So thank you for this presentation. But, you know, I'm always saying to you, oh, my business don't fit into what you're talking about. I said that before I sat down, but you have really helped me understand the process of what it takes. And like when he said, I need to partner with someone because that is really so important. Like you say, I'm not growing the business the way I could if I had a partner to focus on just one thing and I just do what I do. And I think that building that trust is where now I have to really stretch myself. Because you mentioned, what is the PFS? You just said it, but you didn't tell me what it meant.
Personal financial statement.
Okay, that's my personal financial statement. And in essence, as I had said to you in the beginning of the session, what is the criteria that the banks use for the home buying? But basically what you explained is pretty much a similar method that is utilized even when I want to buy a home.
Correct.
Because I was not clear on why the bank was making the statements to me that they did, but you made it very clear because you itemized exactly what they look for, but they don't tell you the truth. They just say according to what we use, but they don't say what it is and how they use it. They don't break it down. So tonight you let me know I need to get some of those finances in order, and I need to really, really hone being in control of everything that concerns my finances, which I was not. Being honest, I was not. So now I know exactly how to target what I need to do to get the paperwork in order, because like you said, we were in this pandemic and a lot of monies was available, but there was some things I didn't have in place. As an entrepreneur, being honest, but I've learned from being with malls that you have to get on board and get your stuff in order. So I'm really, really, really satisfied with what you gave and how it can really help me move forward. So I really want to thank you again. Thank you so much.
You're welcome. Thank you. And I got to piggyback. I will piggyback on that it's important that for us to realize where we are in a business in approaching lenders. It's easy for Natasha to say, well, you know, I approached the lender, but the lender wasn't clear by telling me these different pockets. And sometimes that's going to happen. But now that we know, it's important for us to go back into our wheelhouse and say, how can I look at my credit? How can I really take management of this and really take hold of it? Many times I've heard stories of people telling me of what bankers express, and I hear the anger and I hear the hurt. And a part of me is like, well, the hurt comes from a lack of understanding. I have been there myself. I've approached bankers. Sometimes I don't understand what it is, but the answer is no. And I'm dismayed and I'm downtrodden. I'm taking a defeatist attitude because it's no. It really shouldn't be me being defeated. It should be, how can I understand their no? Because it's really about understanding a language. You understand what that language is, as I explained here, what specifically we look for. You have your documents. You could look for that documents and approach me with confidence that if I told you no, you can even rebut my no and say, but Mark, my debt service was this. I need to know how you match it up. With that type of understanding and knowledge, the conversation could go even further and it could even be overturned.
And another thing, Mark, that I do now is I have alerts for my credit. Just like you said, I'm not joking. Since the last time you were on here, you were teaching us that stuff. I put alerts. Now I'm monitoring. I'm looking at stuff I didn't pay attention to before because it's only because I was in a situation where I was considering I realized that I didn't even meet the bar, but it was okay because now I have the knowledge and I know what I need to do to really get a yes. Whereas before I just was told no, but didn't understand why I was told no. It just gave me a blanket statement. Well, you know, according to the criteria of the bank, we look for this, but you really didn't explain it to me. Like tonight, you really went through it step by step. And I can just like remember the conversation. I can remember why and where I didn't fit. So this was really good. Thank you.
Thank you. Thank you.
Other questions, unmute or raise your hand, whichever you want to do. Because I got tons more, but I'm not trying to hog the mic. So as they said, if you don't take it, that's more for me. Okay. Any questions, or should I trigger your memory when he spoke?
Okay, I got one
Angela.
more. Sorry, Wendy.
Okay.
One more. The statement that we need to make, the capacity statement. Can you do that again, please, Mark? I know it was mentioned, but like you said, the particular things we need to put in a capacity statement, because I didn't write that down.
Do you know, right? It's surprisingly that I mentioned a capability statement, but Winnie in her classes in Marls covered those exact same topics that's in the I call it by a different name. I call it a capability statement.
Yeah.
But the contents of it is how long you've been in the business, when you started the business, what's your experience in the business? Have you been doing this in years and now that you're just transitioning? What is your personal experience? Did you have a personal job and now you're starting this? Or did you have a similar job in nature and now you're doing it on your own? And I know that there's a thing that I was on here that Winnie showed me the last time that she taught. It literally broke down step by step all of these components, and it led into your life plan, which leads into the actual financial component that we look for in approving a loan.
Yeah, that's that 1 page proof of concept document.
Correct.
Of that, right? So that's why we share, Mark, with our members. They cannot quit under 3 years. They do themselves a great disservice not sticking with malls for good 3.5 years, because it's so much they need to know. Better than they will get in an MBA program. Some people have been saying that, all right? We are giving them deep dive, deep depth, you know.
And I got to add on that. I have to add on that.
Yes,
in
sir.
approaching this, I always say, you're going to learn what you thought you knew.
Yes, sir.
There's so many people that approach us and they get turned down and it's a no. Unfortunately, we can't proceed with the loan. And the answer I always get is, well, I have good credit. How come I can't get a loan? I got good credit. When there's more other things that we look at. So it's really advantageous for you, the business owner, to really do a deep dive. How can I learn more? How can I learn more so I can position my business in a place to have multiple yeses?
Yeah.
There's a saying that says, he who knows doesn't need to be told. He who thinks he knows seldom listens. And I try to share with each and every individual that you need to learn more. Even though you think you know, you may learn something even in a smidgen that you didn't know.
Yes, that's a defining purpose. Thank you. Angela.
Angela.
Hi, Mark. I just wanted to thank you
Hi.
for the tremendous presentation. I actually was able to have my daughter on the presentation as well. Through Winnie's encouragement from the beginning, she is actually being very excited about joining me. And so one of the questions I wanted to know was, in terms of repayment of the loan, do you or do you allow businesses to sort of establish automatic payments?
Yes, that's an option. And most options for our repayments are auto payments. It could be auto on a monthly basis, or you could say, Mark, I would like to pay when I requisition. Meaning you pay when you get paid, or when you actually satisfy your purchase order, that's when we're getting paid. It all depends on the varying of structure that we establish that specific loan.
And to also the type of business you have, because
And to the type of business, correct.
okay.
If you're in a service industry, we're not going to structure a loan with fixed payments.
Right.
And you have to remember, we're not thrusting anything on anyone. We're having a discussion to meet on a common ground where a program is concerned so that we can get you in. So we will have a discussion right through with payments, with terms, and whatever satisfies you as the client. And if
Right.
needs be, we will be as flexible as could be, as policy permits.
Okay, thank you.
You're welcome.
And Mark, I'm not going to answer it, so I'm going to let you answer it. What's
Sure.
the difference between CDFI, which is what True Fund is, versus a Chase Bank?
A CDFI is a community development financial institution. And what we are, we're not a bank, which means we basically don't adhere to the same rules of a bank under the FDCI rules. We do not adhere, we adhere under Treasury rules that governs all and any CDFIs. That's why we're able to lend in a different capacity. That's why our policies are a lot different. And that's why our overall lending platform is not as stringent as a per se bank. We're able to lend more flexible types of lending because we engage more in community lending. And we have certain specific pockets of lending, like for women-owned businesses, for MBEs and MWBEs, things of that nature. That's why we're able to lend in that capacity. And that's the key difference between a traditional bank and us.
Thank you. Another thing that I realized with you, Mark, I don't know if it's just you or the culture of True Fund, because you know mutually that there is a client that we have been working on or more going on more than 9 months now in getting a huge loan, and you have been very patient in keeping that person's application open. It's almost going past 9 months. I think regular banks would have, closed and say, sorry, you don't qualify. But I noticed that you will keep the clients, our members, their application open on the desk, giving them time to work towards what they need to do. I mean, can you address that?
Yeah, I can expand on that a little. It's the model that we stand on, which is our high touch model. And what does the high touch model mean? It means that we understand that you might not have everything today to provide me for the furnishing of a loan. For a loan of certain size, it's going to be multiple documents that I'm going to be asking for. Sometimes it may require you going hop, skip, and a jump and flying just to get a document that we need. It may take time. The documents that you have furnished us with, we may request additional family members to sign on. We may be waiting. When I see that a client has the willingness and they've made effort, I will keep a file open for that client. With understanding and sharing with that client, this may take a while because I've been waiting, but nonetheless, I don't want to shut this door or this opportunity on you.
Powerful, powerful, powerful. Just when you mentioned about the 5 C's and the character is so important. And there is something that I shared with my clients as well. I explained to them the importance of working with a CPA and not just a person who files taxes. I always say to a business owner, it's one of the most fatal things, I believe, in your financial life and your business is to work outside of a qualified CPA, again, because not all CPAs are qualified. I'm a victim of one, okay? But one thing I did understand is that I want to make sure I'm not missing my tax filing deadline, because there is money to be paid when you miss your deadline, right? Something is going to get sacrificed. Your accountant at times may not be able to fit you back in a timely schedule. They might just throw you down to the September schedule, and now you need a loan in June. What are you going to do? So one of the things that I train my clients to do, come February, have your documents to your CPA. Because by now in September, I've already closed my books from January to August 30th. So come January 31st, I only have to do what? September, October, November, December. There is no reason on earth for me to have to be my accountant waiting on that. And it is very important. Step 2, it was very painful when some of my clients couldn't take advantage of grants. And I see Ratasha was saying something similar. so much availability, money, grants, not even loans were available, and they couldn't take advantage of it because this very clever CPA in 2019, did not know a pandemic was coming with opportunities for funding in advance. And they said, I'm helping my clients out so they don't have to pay taxes, right? So I'm going to help them to have a zero balance, but not zero, but a negative. Please speak to that, Mark. If they had positive $2, could they have gotten a grant? If the 2019 taxes had at least a positive $2? Tell me what that looks like.
Well, the answer to that question is the direct answer is yes. If it was positive, they would have been able to capitalize on the grant.
Mhm.
However, if you have an accountant that's telling you, well, we're going to put you in the negative for X, Y, and Z reason, one needs to understand why the person that you're hiring is doing what they're doing. I'll repeat that. We hire people all the time for things because it's like it's convenient. I might not know how to do something, I hire a plumber. But in the same token, I have some understanding of what that plumber is doing. So the plumber is not going to come and just stand up there and say, well, I'm fixing the pipe. How are you fixing the pipe? You're standing up. Well, this is how I fix the pipe. If I had no clue, this guy could charge me and he didn't do anything. So it's always important that if you're hiring an accountant, you vet your accountant. And if your accountant is telling you, well, I'm structuring your books in this particular way, ask questions. I think that's something that we in our community, we fail to do. We don't ask enough questions. So the thing about it is, and I think sometimes we don't ask enough questions because it comes from a place of pride. We don't ask questions because I don't want anyone to know that I don't know. So I shake my head and I keep it moving. But at the end of the day, it doesn't work out in your favor. It's always advantageous if you hire an accountant to ask, why are you structuring my books this way? Why is it reflecting a loss? What is this? What is the impact of this on me? When I file again next year, how is this going to impact me at all with my filing? It's important to ask questions and ask questions and ask questions until you get an answer that satisfies you, until you can understand it. Because they will give you an answer because it's an accountant that you've hired. But that answer might not still be a satisfactory answer, but it's an answer. So please be keen with that. With when you're hiring and dealing with accountants, please ensure that you have an understanding with how they're structuring, how they're filing, what they're filing, and how it's reflecting. Because at the end of the day, it's only going to affect you. It will not affect the person you hire.
Exactly. As we now come to a close, this is such a profitable conversation. I feel it should be a half-day workshop, but we're working on that, okay? I wanted to share that I'm hoping this COVID experience has woken our senses to understand what you just shared with us and why we must focus on our books and our finances, and the free stuff can't continue to happen. I say free begins when you're giving away your free services. It should be at the point of transcendency. You have made it. There's excess amount of money. You cannot have freedom on the upswing when you're building. You need as much revenue coming in for the first, I would say 60 months of your business. Gotta be revenue, 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 creative revenue. Membership is the new norm right now, where there's consistent money coming in every single month on a membership program, and everyone in the sound of my voice, their business model can afford a membership. Everyone's business model can afford a membership, and that money is coming in month after month. That's my extra money that's going to pay for phone, it's going to pay for my VA, it's going to pay for my Zoom, all these technology and software, they got to pick up somewhere. And that's where my membership fee is coming in every month to hit those points. Right now, this is the lesson that we ought to learn. And so my walk away and my takeaway would be, please, please, please make sure you are doing your numbers. Get excited about bringing in revenue. Get excited about looking for creative ideas, collaboration. Do your books on time. Get a bookkeeper. It's cheaper. Because you might try to get somebody to help you in your kitchen or your whatever, get that bookkeeper. It's easier to hire a small bookkeeper, a person in college or school, what have you, and have a person like Mark give them that nice long list and said, keep your eyes on this. And you tell them when this happens, come in the kitchen, knock on the door, say, we got an issue here. We need to raise money. We need to sell more plates. We need to sell more something. They are keeping you on point. All right. So that being said, we are coming to this profitable close, regretfully, because God knows I have so much more, but we have to come to an end. Stephen, I know you just came in at the end, but I'm going to share this video. And as a matter of fact, I want to say close the recording now because it makes it